What if I told you that turning a 10,000 euros just sitting in your bank account into a reliable stream of recurring income is entirely achievable? Most people chase the next huge 10x bagger growth stock, but not you today. You're here for monthly cash flow. If you had 10,000 euros right now, how would you turn that into monthly income? In this video, I'm going to break down with examples exactly how to invest 10k in the stock market to start building reliable cash flow even if you're a complete beginner. So, hi guys, welcome back et bienvenue to the channel. But before we break down this income strategy, a quick disclaimer. This isn't financial advice, I'm just sharing strategy based on experience and research. So always do your own homework or speak with a licensed advisor before investing. Everyone has their own way of investing. Some people invest to boost their savings, others to pay bills or for a quick purchase, and some to build long-term wealth. But most strategies over the long run on the stock market usually fall into two categories: income investing or growth investing. In this video, we're going to look at the income side of things. What is income investing? Let's start with the basics. Income investing is all about prioritizing cash flow, consistent money coming into your account, rather than capital gains. You're trading here a bit of potential upside for more predictability, stability, and steady recurrent income. Cash flow is more important than capital gains. There are lots of ways to generate income with 10k invested in the stock market. Here are the ones we may be interested in today. We may get dividends from stocks. We can have also interest from bonds. It's more stable versus stocks. It's a regular interest payment, and there's also diversification. We can invest in money market funds in short-term debt securities. There's stability here, liquidity, and it beats inflation. You can go with rental income from real estate. You can also invest in real estate investment trust listed on the market, what we call the REITs. It's a steady income. There's also diversification. It's a different underlying asset class, and you have liquidity. You can go into business development companies. Yields are higher than traditional funds. You invest in the private credit asset. There's also index funds, what we call ETF, the best passive investing form. It's diversification, low cost, and it can be a long-term growth also. You could also get in covered call ETFs. This is the higher yield space and there's good income, also diversification. Or you can even go with crowdfunding. These are higher risk option to gain exposure to business or real estate loans for high returns. So how to invest? Here is how I would break down a 10,000 euro portfolio designed to generate monthly income. This isn't the only way, but it's a diversified approach that balances risk, stability, and cash flow, of course. You can play it in many ways. With 10k, you can buy around 8 to 15 different high-quality dividend assets and instantly diversify across 100, even 1,000 of companies. This is a kind of set it and forget it income stream. Okay, let's build the allocations. First allocation we get is covered call ETFs. We will go with a 40%, which is 4,000 euro. With this, we will consider higher yield options ETFs. They use option strategies to generate income, but they come with more risk and sometimes with less capital appreciation because the premiums earned in option strategies are capping the growth. They boost your income, retirees are fan of them, but we will not go all in on it. So we will go with the tickers JEPQ, QYLD, WINK, SYLD. Other possibilities here are JEPI, JEPG, XYLU. Second, bond ETF. We go with a 10% allocation. Bonds are boring, and that's a good thing for income investors. I would put 1k into something like PIMCO monthly short-term high-yield corporate bond with a 6 to 7% yield. It's hedged in euro. The ticker is STHE. With bonds, generally, yields are lower and more stable than dividend equity stocks. But here with this PIMCO fund, I went in the high yield space. If you don't know PIMCO, it's a global fund manager in active fixed income across public and private markets. It's well known in the US. 3. Okay, after bonds, next allocation is dividend stocks, 15%. The allocation here could have been different, but just choices as always. First up, 1,500 euros into high-quality dividend quarterly paying stocks. Think companies like dividend aristocrats or high consistent payers with average yields around 5 to 7%. For this video, I will go with 4 ones. 2 could also have been a good combo. My tickers here, Pfizer, Verizon, Total Energy, Altria. Of course, there is many other possibilities. Okay, we're at 65% allocation with our 10K, so we're now going with alternative income payers. And this is a great way to diversify your income sources outside of standard stocks. Right, 15% allocation. Next, I will put 1,500 euros into REITs, Real Estate Investment Trust. They are sort of like mutual funds for real estate in a certain way. These are companies that own or finance income-producing real estate like shopping centers, industrial warehouses, data centers, apartment building, etc. They must pay out 90% of taxable income they earn to the shareholders. For the tickers, we will go with Vici and O. The first one is young and has growth, and the other one is a dividend aristocrat with very low growth. Other tickers could have been ADC, NNN, PLD. 5. BDCs, 20% allocation. I would allocate 2K to BDCs, business development companies. Even if it's a bit high, 15% allocation would have been better, but I'm fine with that. Always choices while investing anyway. BDCs, as rates, pass through at least 90% of their net investment income to shareholders. BDCs lend or take minority equity stakes in private companies, giving us exchange-traded access to the private quality asset class stocks. They are too large for traditional small business financing and still yet too small to tap the public bond market. Here, I will go with the premium Main Street Capital, MAIN, and RS Capital Corp, ARCC. Other tickers possible, OBDC, CSWC, HTGC. Okay, we're closely at 100%. And finally, but not necessary, you can have a cash buffer around 500 to 1,000 euro if you want. So let's estimate how much is this monthly income and do a quick recap to see how the 10K breaks down. We have 4,000 euros in covered call ETFs, 40%, 1,000 in bonds, 10%, 1,500 in dividend stocks, 15%, also 15% in rates, 1,500, and 2,000 in BDCs, which is 20%. Altogether, this portfolio could yield 7.3 annually percent, which is about more income than 700 euros per year, or around from 56 to 62 per month. That's not life-changing for sure yet, but every month those income payments can be reinvested to buy more shares or new one for diversification. This is important because it is the foundation of your passive income. If you don't need the distribution yet, reinvest those dividends. That's how with time you build momentum and compound income faster. You can enroll in a dividend reinvestment plan for that called DRIP, or do it manually, it doesn't matter. And if you're allowed to tax advantage accounts, go all in these ones. The key to income investing isn't hitting home runs, it's about consistency, discipline, and building a portfolio that works for you while you sleep. You must sleep well at night. Start small, be consistent, and reinvest your income if not needed. And if you want to supercharge that income, why not adding monthly contribution, let's say 200 euros, each month in your portfolio. You can see big difference with and without reinvesting dividends. This is smart investing. So, in what would you invest 10K right now? Let me know in the comments below which strategy or asset would you start with. And if you found this plan helpful, hit that like button and subscribe for more real-world income strategies. As always, thanks for watching et au revoir.